Hi, and welcome to the help file for spreadsheet chapter 4. And in this spreadsheet, we're looking at the cash budget. We have 4 worksheets we're working on: cash budget 1, cash budget 2. And cash budget 2 is just a duplicate problem to cash budget 1, depreciation, and pro forma financial statements. So these are elements from chapter 4 that are being reinforced in the spreadsheet. And remember that this spreadsheet is an exercise. I'm not looking for people to have 100% correctness on this exercise spreadsheet. I'm looking for you to give it your best attempt. And I expect that you'll have some difficulty. Some things will come out 100% correct, and that's fine. The idea here is that to give you a little practice working in Excel, to give you a little reinforcement on the topics of the chapter, and to also make the class a little bit more interactive and engaging. Now, once you've submitted your spreadsheet and this assignment has closed after the due date, you can go to course documents and there's a folder called Spreadsheet Solutions, and the solution spreadsheet will open up with all the answers. So you can go back and compare your spreadsheet to my answer key and see what you got right or wrong, or how to correct certain things to kind of self-evaluate your performance on this. So as long as you give this a decent attempt, I will award full credit. The only time I will take credit away is that if you don't attempt to do anything, you just submit it blank or leave a couple of the worksheets undone, then I'll take points away for no effort, but effort will always be rewarded on this assignment. Okay, so let's look at the cash budget. Is a rather involved problem. And you really do need to read the textbook to understand how to create a cash budget. Because the textbook, there's no real substitution for just going through the textbook, looking at their examples, and reading their explanations of how to create a cash budget. You're not going to understand this just from listening to the PowerPoint lecture I put up earlier, or just going through this help file on the spreadsheet. You really need to get into the book. So the cash budget's a rather involved problem. So what we have here is the instructions. Well, basically think of this as more information. So they're saying that you've been assigned a task of putting together a statement for the Acme company that shows its expected inflows and outflows of cash over a 3-month period, July to December, and you have been given the following data. Okay, so expected gross sales for May through December, and they list 290,000, 425,000, 500, 600, 625. So first thing is, when they're giving you expected gross sales from May through December, this 300 was going to represent May, and this last number over here will represent December. So if we go down to the spreadsheet, you see how it's already filled in here: May, June, July, August. That corresponds with May, June, July, August. See how those are the same numbers? So what I would do is the rest of the numbers is what I'm going to fill in on the remaining cells. So I have September, October, November, and then there's a December. All right. So where did I get those numbers from? Up here. Let's slide this over. These are the months from May to December. So they gave us the expected gross sales, and I already just used this information to fill in this first line in the spreadsheet, forecasted sales. Okay, so let's move up. All right, 12% of the sales in any given month are collected during the month they occur. However, a firm has a credit policy of 310 net 30. So factor in a 3% discount into the current month's sales collection. Okay. So here's a piece of information. 12% of the months of any given month collections are collected during that month. And there's a credit policy. So let's go down and see what this means. Okay. So here's the 12%. I already put it in the spreadsheet for you. And so the cash sales here are 12%. So let me just this times 12. Okay. I'm going to put dollar signs because I want to lock down this 12 percentile here. Okay. So that way I could take this and I can just pull it across to get my cash sales. And then, so down here, this 1.08, this is going to be 3% discount. So to get a 3% discount, so this times this, 1.08. So again, let me lock down the discount cell. And I lock these these are called absolutes. When I put in the these dollar signs here, they're called absolutes, and it locks a cell. So that way, when I pull this over, you'll see that this cell, the column will change. However, this will not change. So if we go over here, you'll see that the formula will pull in column F, but still keep column C, because I want this 3% to be locked down, otherwise that will drift and my numbers will be screwy. Okay, so here's I calculated, so the cash sales, what this is saying is May's $300,000 in sales, 12% will be paid in cash, and of that cash payment, there'll be a 3% discount. So we're going to give a 3% discount. Okay. So that takes care of this line. So, and what I can do, once I have my formula to calculate 12%, so what is 12% of 600,000? 72. So 600,000, 12% is, so this means in September, I immediately collect $72,000 in cash collections. And of those cash collections, 2,000.16 are going to be a discount. You know, sort of like you say you get it's like 2% cash back or 3% cash back here. So now when you see this signal here, these 3 zeros, it means we're truncating these numbers by 3 zeros. So all the numbers here, this should really be 300,000, but we're truncating it by 3 zeros to make the spreadsheet smaller and make things more manageable. Okay, so let's move ahead and see what's next here. Okay, 75% of the sales in any given month are collected during the following month after the sale. Okay, so what this is saying that there's a 1 month lag. So here's the 75%. There's a 1 month lag. So in the month of May, this 300,000, I'm going to collect cash on that, and that's it. So there's still $200,000+ uncollected. Well, 75% of this total is going to be paid a month later. So basically, think of what happens here is I made a sale, but they waited 30 days to pay me. So to calculate this factor, I need to take my previous month's sales. Oops. Remember this number, 225. I'm going to take my previous month's sales and multiply it by 75%. And you see I get the 225? And what that's basically saying, what this is basically saying is that it takes a month to collect 75% of May's sales. All right. So let's go back up. And 13% of any given sales are collected the second month after the sale. All right. So this would be the second month. Second month lag is 13%. So again, remember this 39 number. I'm going to take my sales and multiply it by 13%, and I get that 39. Just going to put my absolutes in to lock down that cell. Okay, so this is the confusing part of the cash budget a lot of people struggle on. So let me just put some highlights in here. May is my sales forecast is 300,000 for May. So when am I collecting this money? Well, 12% of it I'm going to collect, I'll put this in the green, I'm going to collect 12% straight up cash in May. So imagine that you sold something, your sales for your store. So some of your stores are rung up in cash. So there's a 12% on average is cash. However, there's going to be a discount because the people paid cash. So you offer a discount for certain people who pay within 10 days that cash. Okay. Now, of what's remaining, we're going to have, of this 300,000, another 75% will be paid a month later in June. And then the remaining 13% will be paid in July. So if I add these three numbers together, let me just take this cell over here and I say, what if I add the 36 plus the 225 plus the 39? I get the 300,000. See this 300? This 300 is broken up. It's time shifting. 12% now, 75% a month later, 13% 2 months later. So we're time shifting here. And that's, for some people, it's difficult for them to comprehend that. Now, to get the cash receipts for the month here, I'm going to add my, not my sales, but my cash minus my discount. This is less discount, and that's how I get the 34. So for this particular month, let's do July, I'm going to take my cash sales minus my discount plus my 1 month collection plus my 2 month collection. Okay, so now for June, 12% will be collected in June, and of this 290, 75% will be collected in July, and of this 290, the remaining 13% will be collected in August. And this concept is the hard concept for a lot of students to understand. So what's happening here is you're not getting paid it all at once. When you make a sale, the collection of that sale gets staggered over a 3-month period. The current month, a month later, and then 2 months later. So that's a difficult aspect of, that's one of the difficult aspects of the cash budget here. Okay, so let's move on. The expected purchases of raw material. Okay, so we're gonna, let's just finish the cash budget here first, the cash receipts budget. So September, I collected, my forecasts are 600, and 12% will be collected in September, a 3% discount. And now I have to do my cash collections. What's the rest of September cash collections going to be? Well, it's going to be 75% of August. So this will be 75% of August. And this will be 13% of July. So this is formula. Let's see. I'm going to bring my formula forward. 557. So this is July, and then 18. Why is that? No, that is correct. That's correct. So this is, so if you took, so basically here, I'm taking the 500,000 and I am multiplying, you see, let me just shift this up so you can see the formula in the cell. Okay, this is the formula in the cell. So here, it's G53 times C57, so 75%. So September, now, where it's 75% of what number, you may ask. So let me change the color here, this blue. This is 75% of August. Now this is going to be, move this over. Okay. So if July was, let's make July a different color. This is going to be 13% of July. So let me go over. Okay, so I'm just going to try to color code it for you so you understand where the percentages are coming from. 600,000 is the sales, the forecasted sales in September. Of that, 12% will be collected in September. Now, other cash collections in September, I'm going to be collecting 75% of August's money and then 13% of July's money. So I color coded them so you know that my cash collections of cash sales, my 1 month lag and 2 month lag are coming from these previous months. So the color matches where I'm multiplying the percentage by. So here are the percentages. Right? So the color that the box is where I'm pulling the sales to multiply by the percentage. So if it's pink here, 12% from the 600 and 3% is actually from the 72. This is the discount. Now, blue here, I'm collecting 75% from August sales, and in this red here, I'm collecting 13% from July sales. Okay, so the cash collections in September are a combination of collecting cash from 3 months worth of sales, all at various percentages. And then here, I'm going to get the sum of my 2 month collections, my 1 month collection, my cash collections, and minus my discount. And that will be my total cash receipts for September. Okay, so I could take these formulas. I no longer need these colors though. I'm going to take these formulas and I'm just going to drag them across to represent my cash collections for the rest of the year. So this is how much money I took in cash. Now let's move up to the instructions again here and say the next line. The expected purchases of raw materials in any given month are based on 60% of the expected sales during the following month. Okay, so 60% of the sales of the following month. Okay, so let's move down here. So, purchases. This is going to be 60% of June. So let me put that formula in, plus June times 60%. Okay. Oops, lock down that cell. Okay, better. So let's discuss what's happening here. Take these colors off. Okay. So now, when you're forecasting sales in June, okay, a month, in order to make these sales, you have to make your products. So a month before, you're going to have to purchase your materials so you have your products ready to sell in June. So let's move 1 month ahead. In July, if you're forecasting these sales in July, 60%, we're figuring that 60% are going to relate to the materials that I need to purchase in June so I can build the products to sell in July. So that's why we move backwards. So again, when it comes to purchases, we have here is telling us 60% the expected purchases of raw materials in any given month are based on 60% of the expected sales during the following month. So that means if I want to calculate July's purchases, I'm going to have to look to August's sales forecast. So what this is basically saying is I say, okay, we're going to sell 500,000 in August. I need to buy $300,000 worth of material in July to make the products that are going to be sold in August. That's why we kind of step it backwards. So again, in September, I have 600,000. So I'm going to multiply that by 60% to get August's purchases. So there we go. So yeah, we're moving back we're taking the sales forecast and we're bringing it 60% of that backwards 1 month. See how the colors denote the forecast of where I'm getting the 60% from? So I'm taking 60% of June's to calculate May's purchases, 60% of July's sales to calculate June's purchases, 60% of August's sales to calculate July's purchases, because you have to purchase first, then sell. You have to purchase your materials first, and then you can sell them. And I notice December is 0 here because I don't have January's sales forecast, so I can't figure out what my purchases are. Okay, so that's the purchase line. Let's move ahead. Let's move back up to the instructions. All right, so next line. The firm pays 100% of its current. The firm pays 100% of its current month's raw material purchase in full in the following month. Okay, so we wait 30 days to pay. So we're paying 100%. So here, see how this is the same number? We received it in May, and we're going to pay in June. Just like on a credit card. You receive your goods now, pay a month later. So if you see these, so I'm color coding it so that you can see that what I'm doing here is I'm just saying plus of the following month. So I'm just putting a formula in here. Let's move this forward. Okay. So basically, we're just paying a month later. That's all that means in the cash budget. And it says here, laggard 1 month. So payments of accounts payable, laggard 1 month, 100% of the previous month's purchases. So I color coded it so you understand where the money is coming from, and it's just sliding 1 month in advance. Okay. So let's go back up and see what the next thing is. Okay. Wages and salaries are paid on a monthly basis and are based on 6% of the current month's expected sales. Okay. So wages are 6% of the current month. So I would take the current month's sales and multiply it by 6%. And let me lock down, I'm hitting F4 to lock down that cell. So then I can just drag this across. You'll see that these numbers won't change. And I can bring this all the way across. Okay, so that's our wages. They're 6% of the current month's sales, so that's an easy one. And then, let's see. Monthly lease payments, monthly lease are 2% of current month's expected sales. Okay, so lease payments are 2%. And then the monthly advertising amounts to 3% of sales. Okay, so down here, sales times 3%. That's what happens when I don't lock the cell down. I have to put the dollar signs around both the letter and number, so that way this percentage won't drift. But I do want the sales number to drift, so there we go. See what else we got. The R&D expenditures are expected to be allocated in August, September, October at a rate of 12% of sales in those months. Okay, so we can see here R&D, the 60 is already plotted in, but we're going to have to also put this in for September and October. And they said that it's 3% of sale. Let's see. August, September, October, 12% of sales in that month. Okay. So here I'm going to take the sales of the month multiplied by 12%, and we're doing that for 3 months. Oops. Again, lock down the percentage so I can just quickly drag this across. Okay. That's taken care of. What's next? During December, a payment of insurance for the following year will be made for $24,000. Okay. So let's go to December. And 24,000. You'll see that this row is insurance paid. So this A column. Let's go over one. Let me shorten this a bit so we could see more of the website. I mean, more of the page to December. Okay, and then now it fits nicely. All right. So then, what else do we have? Okay, during the months of July through December, the firm expects to have miscellaneous expenditures of 15, 20, 25, 30, and 40,000 respectively. Okay, so I need to put these numbers in down here. Other expenses: 15, 20, 25, 30, 35, and 40. And what else we got here? And taxes paid in September amounts to 40,000. Taxes will be paid in September. The amount of 40,000 in December, 45,000. Okay. So taxes. September will be 40,000 and 45. This should be a box. Okay. All right. Beginning cash. Okay, so we don't need that yet. So let's finish the cash disbursements. So this means really our cash payments. So what we're doing here is we're adding up. These purchases on this line are on credit. So we're not going to add this in our total disbursements. We're only going to add basically everything from here down. So this 33 is going to be 18 plus 6 plus 9. And this 25 here is going to be 205. 205 is going to be a sum of these numbers. So basically, I am adding all these blue boxes you see highlighted here. I'm adding all these together because this is a payment, this is a payment, this is a payment, this is a payment. These are all cash disbursements. So I need to add all of these to complete my cash disbursements. So again, don't add in purchases percentage of sale. That's just to figure out what our purchases are. And these are our actual, below here are our actual payments. So we're not paying this twice. We only pay it once in a month later. So this is really just calculating what we need to purchase, and this is when we're paying it. So we only need to add this blue field here. So if your number matches mine, you've got it correct. Okay, let's move down to the cash budget here now. Okay, so the beginning cash balance is 15,000 and the target cash balance is 15,000. So prepare a cash budget. These are the actual instructions here. Prepare a cash budget from July to December. So we're starting July. So they gave us May and June as informational months, and our cash budget's really going to go from July to December because they have to give us these 2 months of sales in order for us to figure out what our collections are in July, August, and September. All right. Incorporate spreadsheets similar to table, okay, this is from textbook 4.8, 4.9, and 4.10. If you want to look in your textbook, these are where these tables are from. And divide your spreadsheet into 3 sections: cash receipts, cash disbursements, and cash budget. I've already done that for you. The cash budget should reflect the beginning and ending monthly cash balances, the required total financing in each month, and the excess cash balance in each month. Based on your analysis, briefly describe the outlook of your company over the next 6 months, discuss the obligations of the funds available to meet them, and what could the firm do in case of a cash deficit? Where could they get the money? Okay, so these are some text-based questions. Let's go down to the cash budget. Okay, so cash budget. Total receipts. Where did I get my total cash receipts? I got that from up here, total cash receipts. Put that there. Less total cash disbursements. Where did I get this number from? Right here, total cash disbursements. So to get the net cash flow, I'm taking the total cash receipts minus the cash disbursements. It told us the beginning balance was 15. That was in the text right up here. Beginning balance, cash balance is 15. Target balance is 15,000. So our ending cash, how do you get the ending cash here? We take our net cash flow and add it to our beginning balance. Or, I don't know if we did that right. This was... Yeah, that's correct. Because, yeah, we have a negative cash flow of 10,000 and we have a beginning balance of 15, so that gives us an ending balance of 4. So our minimum desired ending balance is 15, so that means we're going to require this additional financing. So to get this, I'm going to take our minimum cash balance as desired minus our actual balance. Or maybe do our actual balance minus our minimum. Yes, because I want that negative. So I want to take, again, our ending balance minus our minimum to get our refinancing needs. So we need an extra 10,000 in cash. We don't have an excess. So we go to the next month, and again, I'm pulling my cash receipts from my cash receipts. I'm pulling my cash disbursements from my cash disbursements, and I'm calculating. I'm going to take to get my net cash flow, I take my cash receipts minus my cash payments. So I have a negative cash flow again. My beginning cash balance, if we look at my beginning cash balance, I'm going to take this ending balance and move it up here to the beginning. And now we find that if I take my new cash flow plus my ending cash balance, I get okay. So put the formula in there. Okay. Now, so what this is basically saying, I'm short. My cash flow is negative 20,000. I have a cash balance of 4,000, so my ending balance is negative 16. I want to have a minimum cash balance of 15. So what this means is I have to take my ending balance minus my minimum cash balance, and I have a deficit here now is growing to 31,000. Okay. So let's do this one more time. Where does the cash receipts come from? I take the current month's cash receipts, I take the current month's cash disbursements, and I take my cash receipts minus my disbursements, and I figure out that I'm going to be in a deficit. I'm going to have a negative cash flow of 62. Now my beginning cash balance is simply going to be my ending balance. So I'll just take that ending balance was a negative cash balance, and then my ending balance here, the same formula, I'm adding these two together. So this is my ending cash balance, which is still negative. I want to be at 15. See this minimum cash balance, and that 15 is coming from up here. It tells me a minimum target cash balance is 15. Okay. So I'm going to see that. So basically I'm negative 79,000, and I have to get to a positive 15,000. That's going to take $94,000 to do that. So if I added $94,000 to a negative 79,000, I get to a positive 15. So this is really just showing how much additional financing I need. So let me just, and this is just 0 right now. 0 there. Okay. So let's move this forward. Okay, so we see here that something's changing here. This should be 15. This is one problem dragging the numbers forward. Okay. So we have a cash deficit, but finally in, I'm not sure what month this is. Let me just copy these months down. That's better. So I see what month we're in. So finally in November, we see that we have a cash surplus that is going to, we have a surplus here. We have a bigger surplus. So we finally get to a positive ending cash balance. Our minimum is 15. So in this particular case, we don't have a refinancing need. Here we have basically, if you track the minimum, we have an excess of 70,000. And here we're going to have an excess of 15,000. So we go from a deficit to a cash surplus here. Okay, and that's the cash budget. Now, the last part of this, the last part is they have these analysis questions, and you could just answer them down here. You can insert a text box if you want, or you could just type it in the cell and it'll just sprawl it out. So you can just type your answers to those questions at the bottom here without a problem. Okay, so that's how to do the cash budget. Now I did this whole entire cash budget for you to show you the step-by-step process, because I know it's difficult and confusing and you need to read the textbook in addition. But the second cash budget example is an identical problem but with different numbers. So here I just want you to try it again. I'm not going to walk you through it because I did it over here in cash budget example 1. So I'm going to expect you to do it yourself. Okay, because I showed you how to completely do it in budget 1. Okay, so let's move on to depreciation. Depreciation is another tab in this spreadsheet. And here basically I give you the asset, here's the base amount, and you have to calculate depreciation. So it's very simple. You just take the base amount and you multiply it by the rate. And you can just pull this number down. And for total depreciation, you just want to make a sum of that column. And this should equal 100%, and this should be the full base amount. So what we're doing is we're taking this asset and we're breaking off little pieces of it to depreciate, to put on our balance sheet for each of these years moving forward. So once again, if you're going to do example 2 here, just take the base times the rate. Copy these rate, do the same, multiply the base times the rate for each one of these, and you'll find that the total depreciation should be 100% of the base amount. And you see how these percentages add up to 100% as well. So this is a 3-year cycle, and this is a 10-year cycle. Remember, the first and last year are 6 months, as denoted in the lecture and also in the textbook. Now, for this cycle here, I left a little note saying that you can find the modified accelerated cost recovery schedule in your textbook. So for this problem, you're going to have to actually look up the rates for a 7-year cycle to calculate the depreciation here. So that's something you're going to need your textbook for. But very simple how to calculate this. You're just multiplying the base amount times the rate to figure out what's the depreciation amount for that year. Okay. And the last worksheet is the pro forma financial statement. Okay, so here, there's 2 examples. I'll walk you through example 1, and you can do example 2. Okay. All right. So these cells, these cells do not need to be filled in. This may confuse you, so let me put them in black so you know you're not filling anything in here. Okay, so fixed costs are 40,000, and variable costs are 40,000, or 40% of sales. So to calculate the pro forma for 2016, that we're saying the fixed costs are going to be identical. It's the variable costs that will change. So I just need to take 40% of my sales to calculate my new variable costs. So my gross profit is going to be my sales minus my fixed costs minus my variable costs. So my gross profits are 41. Here's the formula up here, 41,000. Now, if we're going to do my operating expenses, the variable costs are 5%. So again, I'm going to take 5% of my sales, and I'm going to calculate my operating profits by taking my gross profits minus my fixed costs minus my variable costs. Okay. Now, less interest expense, it's already written in. We don't calculate anything there. Net profit before tax, we take our operating profits minus our interest, and that's our net profits before tax. And less our taxes are 15% of our profits. Okay. And then our net profits after tax are going to be our net profits before tax minus our taxes. Okay. So that's how you do a pro forma. So this is a very simple pro forma financial statement, similar to the pro forma financial statement you'll see in the simulation. And what we're doing here is we're taking our sales and we're just calculating new variable costs based on a percentage of and new variable expenses based on a percentage, and calculating the tax. So it's a pretty simple pro forma. It's basically saying if this is our actual sales in 2015. These were the percentages of variable costs. We're expecting them to be the same percentages for 2016. So, and these percentages are based off of the sales revenue. Okay. Again, a very simple pro forma financial statement. And that's it. So that is the spreadsheet for Chapter 4. And this has been a very extensive help file to make sure that you understand what to do here. And so you are expected to do example 2 by yourself. But I think I've given you plenty of instructions and help to complete this spreadsheet. And remember, the book is going to be very valuable in understanding what to do here, as well as my lectures. And again, I'm looking for a decent effort here. It doesn't have to be 100% correct, but try your best. Okay, thank you, and I'll talk to you again soon.